This video will be 3 option picks on stocks that just don't make sense. These stocks are in territories they don't belong in, and buying options or selling options, which I'm going to discuss shortly, is going to have a stupid high return. As always, I'm not a financial advisor, but 99 out of 100 financial advisors are poorer and less qualified than I am, but that's besides the point. Let's put my Goldman Sachs experience on the line in this video and discuss briefly the fundamentals and technicals of a few different picks that I have and options that I have for you. Alibaba stock just hit a 52-week low after hitting it basically a dozen times in a row. So what is the problem? Well, there's no obvious answer. No analyst downgrades, no negative press releases from the company itself. However, Alibaba rival JD just reported another quarterly loss and the company's weakest revenue growth in 6 quarters. As Reuters pointed out, Alibaba's growth is deaccelerating, and I also understand there's a lot of problems coming out from China right now, and Alibaba's margins are declining. Now, the headwinds that it faces could be exacerbated by regulatory issues, and those could persist for the foreseeable future. And I get it, the market is spooked, but I just don't understand how Alibaba could be so cheap. Alibaba under $80 per share is an absolute steal. I do not think that it's going to stay at these levels for long, and it makes no sense to me. I think that it can get back to at least $100 and rebound in the next few weeks if the China fears ease down. Next, I want to discuss an option pick. This is going to be an option pick on Palantir, ticker symbol PLTR. Much of Palantir's business centers around one thing: analytics. Its Foundry software allows customers to harness multiple data streams and make well-informed business decisions with areas like supply chains or manufacturing. This is a dream stock for someone that understands the booming industry of data analytics. For a company generating $1.5 billion in revenue, Palantir has relatively few customers. It grew its user base from 139 in 2020 to 237 in 2021, marking a 71% increase. This meant that the average customer spent was $6.3 million with Palantir during the year, showcasing just how expensive the product is. Still, there are multiple businesses that can afford this software, especially if it means helping out the supply chain hiccups. I have a lot of optimism for Palantir, and I want to show you the options that I'm looking to do on Palantir stock. All right, I'm going to come back to my portfolio in just a little bit, but let's look at PLTR. So Palantir Technologies. This is a stock that I'm very bullish on. Now, this stock has sold off a tremendous amount. In fact, in the past 3 months, it's down about 35%. This used to be about a $20 stock. I mean, it was trading at $18.93 at the end of the year in December 23rd. And now recently, it has had a really big downtrend. Now, we have had a bottom here at $10.43. And now the stock has actually started to trade sideways and has shown some signs of recovery. So currently, the stock is sitting at $11.65. I'm going to trade Palantir options. Now, I'm going to show you 2 different things that I would do. If you're watching this in the future, you can always go out a couple weeks ahead. I'm going to go out until April 1st. So if you're watching this in April, then you can go for May. If you're watching this in May, you can go out for June. But basically my goal is to go out about 2 to 4 weeks. And this is because I'm going to collect a decent amount of premium. This is still a good option because it has high theta. And what I mean by theta is, let's go to the first strategy. First one is going to be selling put options. So the first strategy, let's say I want to sell the 11 put. Well, theta is pretty good here. I mean, it's 0.02, which means that you're going to be making about $2 per day, which is not bad at all. It doesn't seem like a lot of money. However, if you do think about this, this is an $11 strike. So when you sell this put option, 2 things are happening. First of all, you're obligated to buy the stock at $11 per share. But second of all, think about it. If you're selling at $11 per share and each option is worth 100 shares, this is about a $1,000 position. I mean, it's 1,100 bucks. You are collecting $41, so it's going to be less than 1,100 bucks. Now, you're making $2 a day. So in a month, you're making about $60. About $60 divided by 1,000 is going to be 6% per month. I mean, that's a lot. Just with $1,000, you can make an income of $60 per month, or in a year, you can make about $720, which is not bad at all for just $1,000. So what I really like about Palantir is the implied volatility right here is 79%, meaning the implied volatility is really high. I look for implied volatility that is going to be around, 40 or 45 or 50. That's a good volatility. Anything above that is a fantastic volatility. And when you're selling options, they're going to be expensive, which is a good thing because when you're selling options, you're collecting that income. You're collecting that premium. So when you're selling an 11 put option, you're obligating yourself to buy Palantir at $11. However, the stock is currently trading for $11.65. So that is amazing because you're getting a lower price than the current price of $11.65, and you're actually getting paid $41 for it. Now, this option is actually about 2 weeks out. Now, if I were to go out 1 month for an option expiring, let's say April 14th, which is 30 days, this premium is going to be even higher. It's going to be $61, which again is about 6%. It's actually going to be a little bit higher than 6%, but I'm just gonna say 6% just to be conservative. So a 6% return by selling the $11 put option. You can go out till April 14, or again, you can go May or June. The premium is going to be roughly the same, whether you go out 2, 4 weeks, or even longer than that. You can see right here that the volume is very healthy. It's 1,377 with a very, very large open interest. This is a very good thing, meaning that the options are very liquid. There's a lot of volume. There's a lot of volume here, and there's a lot of open interest. Now, you can also see that translate into the bid-ask spread. The bid here is 60 cents, and the ask is 62 cents, meaning that it's very tight. The difference here is very small. It's good to have a very small difference because that means that you're not losing much money when you're trading these options. In fact, this also means that you can basically go for weekly options if you so choose. You can go for weekly options because you're not really losing much money here in the bid-ask spread. Now, it's bad when the bid-ask spread is really big, but here, this is fantastic. Now, let me discuss closing this position. So when you're selling a put option, you want to do it on a stock that you do not mind owning. So for me, I don't mind owning Palantir. I would in fact love to own Palantir at $11 per share. So when I'm selling a put option, I don't even need to close this position because the worst thing that can happen is Palantir stock goes to $11 and I have to buy it for $11. I don't mind that. So with this position, I don't even have an exit plan because my exit plan is really my entry plan. So either way, I'm happy whether the stock goes down below $11 or stays above $11 because either way, I get to collect this premium. Next stock is Rivian. Now, Rivian is a stock that I have been bearish on. You can see here that I made $950 and $870 on call credit spreads easily on Rivian in the private Discord. The members and I took advantage of Rivian many times, betting that it would fall. Rivian asked for trouble when it recently increased prices of its EVs dramatically, citing inflationary pressures, only to roll back part of that decision. Investors had very high hopes for Rivian, and I wanted to bet on the stock falling. I'm going to show you another exact play that could end up printing money. Now, the reason you will see my view continues to be bearish is prices of key raw materials for EVs have shot up. The extraordinary rise in the price of nickel has even forced EV leaders like Tesla to increase prices of its Model 3 and Model Y EVs. Rivian is already buckling under the pressure of rising input costs and a shortage in the supply of key materials like semiconductor chips. Rivian had earlier revealed it produced 1,015 and delivered 920 vehicles in 2021 against its production target of 1,200 units. Things didn't improve much through the first quarter. Here's what I think. Slow production could give those who pre-ordered Rivian EVs and are miffed by the company's absurd price hike decision yet another reason to cancel their bookings. As of March 8th, Rivian had received 83,000 pre-orders for the R1T and R1S. Also, if you tally that with 71,000 pre-orders Rivian had already secured as of December 31, it does appear that the pace of pre-orders is slowing as well. So let's look at my screen for how I would play Rivian stock in options. All right, so let's discuss Rivian. You can see right here that I have made $950 and $870. I made both of these trades in the private Discord. Now, the private Discord has been super profitable because, well, as you can see here, I have a lot of profits on most of my positions. In fact, I think all my current positions have been at a profit at the moment. So we're doing really well. So of course, if you do want to check it out, it's going to be in the description. It's going to be the first link. You can always book a free call and learn how mentorship with me works. There is a cost associated with it. However, given the results, I highly recommend that you just learn more about it. At the very worst, it's not a perfect fit, which is totally fine. Now, let's talk about Rivian. So Rivian is a stock that I'm not that bullish on. I think they have a lot of issues. These two positions are basically going to expire tomorrow, so in just one day. So what I want to show you is I'm going to open up RIVN in Robinhood, and I'm going to go to trade Rivian options. And I'm going to show you something called a call credit spread. So a call credit spread does not require much premium. I can go out for something like June 17, which is a significant time away. I mean, it's about 4 months out, but that's totally fine because you're going to see that I'm going to be able to collect a lot of premium, and the capital that I have to put up is not that much capital. So check it out. Currently, the stock is trading for $40.57. For it to go up to $60, the stock would have to rise by about 50%, which is very unlikely from happening. So what I'm going to do is I'm going to sell this $60 call option. Now, selling this call option, the next thing that I'm going to do is buy a call option above the 60 strike, which is going to be the 65 strike. Now you will notice that my total credit is $79. If I scroll down right here, you will see that I'm collecting $79 and I'm only risking $421. So the return on this trade is nearly 20%. However, there's a really high chance of this option or this spread to expire out of the money and for you just to collect the $79. That's because the Rivian stock is very unlikely to go past $60 per share by June 17. In fact, if I expand this option, you will see that the delta is 0.33, which means that you have about 2 out of 3 chance of this not happening and about 1 out of 3 chance of this happening. However, even if this does happen, this delta is calculating for Rivian to end at $60. However, if it ended at $60, that still wouldn't really matter to you because as long as it doesn't go past about $65, you won't see your max loss. As long as it stays below $60, you will see your maximum gain. So I think this is a very intelligent position and I think it could work out really well. I've done this many times in the private Discord. However, I do want to say that because Rivian is so cheap right now, I mean, I wouldn't call it cheap by valuation standpoint, but the stock is cheap. It's trading much less than it used to be. There is a chance that it can go past $60 per share. So I would be cautious with opening many of this position. Next, let's discuss Coinbase. One of the most exciting developments for Coinbase is its NFT platform. Although the company faces fierce competition from industry leaders like OpenSea, Coinbase views the NFT landscape as an opportunity. Bitcoin, although bullish long-term, has not been performing well. Coinbase stock is down 36% year to date, and it's hovering near its 52-week low. There is little doubt that Coinbase stock has been dragged down in the broader tech sell-off. I have a mixed view on Coinbase, but I want to show you a strategy that makes money whether Coinbase goes up or if Coinbase goes down. I discussed this strategy in a video on 20xing your money. So if you want the best video I made on growing a small portfolio fast, I'm going to link it down in the description. You can also see it at the end of this video. Let's look at my screen. All right, the last stock that I want to talk about is Coinbase. So I do have a $250 gain here on Coinbase stock. Now I want to show you a position that I think is really interesting. And again, I do talk about that strategy in another video that I'm going to link below about 20xing your money. But let me just quickly show you, this is going to be called an iron condor. So if I go to sell put option, I'm going to go through this really fast because I do want you to watch a full video on it. But if I go to sell put option and I go down to, let's say 160, then I go buy a leg lower, this is going to be the $157 leg. Now if I go to sell call option and I sell a call option for 177.5, then I buy the 180, you will see right here this is a short iron condor. My total credit is $103. I am risking about $147, but oh my goodness, check it out. This option is expiring in 1 day. So in 1 day, I can make $100. This is how you can make $100 per day. You could do this over and over again. Even if you're watching this in the future, say March or April or May, you can just run this strategy every single day on Coinbase because Coinbase is pretty low. However, I don't see a fast recovery in the next day, especially because the market is already up 10%. So trading iron condors is a fantastic strategy to make lots of income. And again, your max loss is only $147, but your max gain is $103, and this option expires in literally 1 day. So this is a fantastic strategy for growing a small portfolio, but I do want you to watch more about iron condors, and I have a video for you that you can watch right here.